Welcome everyone to Vested Interest. This is Shane backing in for another Stock Pick of the Day video. Today we're going to take a look at another one out of the industrial sector, Lockheed Martin. This is an aerospace defense company. It is September 6th. We are going to jump right in the video, but before we do that, I would really like your help. Hit that notification bell down below, hit the subscribe button, join the Vested Interest community, join me on this journey to financial freedom, and drop a comment down below if you find value or if you are a Lockheed Martin investor. Drop a comment down below. Let me know how many shares you have. Doing those things really helps out a small YouTube channel like me with the YouTube algorithm. So really appreciate everyone who's hit that subscribe button, hit that notification bell, and dropping a comment down below. Let's jump right in the video. If you want to know more about this company, check them out at www.lockheedmartin.com. That's www.lockheedmartin.com. That is their homepage where I pulled this information from. Over 100 years ago, on August 16, 1912, Glenn L. Martin established the Glenn L. Martin Company in Los Angeles, California. He started the company after buying his first plane in a rented church, where he took a leap of faith on his risky but innovative new aircraft design at the urging of none other than Orville Wright. I did not know that, right? So one of the Wright brothers helped them start this business here. 4 months later, and 400 miles away, on December 19th, 1912, Alan and Malcolm Lockheed founded the Alco Hydro Aeroplane Company, later renamed the Lockheed Aircraft Company. Talented mechanics, they set up shop out of a garage constructing seaplanes that would shatter speed and distance records for overwater flights. A church and a garage. These were humble beginnings, but these were also men of unrelenting vision and unwavering purpose. The gift that Martin and the Lockheed brothers shared was a unique ability to look past the obstacles of today to the promise of a brighter tomorrow. And they knew, as we've known for 100 years, that innovation, performance, and purpose were the keys to accelerating that tomorrow. So they are in aeronautics, MFC, missiles and fire control. That's what MFC stands for. RMS, Rotary and Mission Systems, RMS, that's what that stands for. And obviously, it's not new, but it seems to be the new buzzword, space. Space is a demanding environment, but with systems built by Lockheed Martin, space is where the future takes flight through partnerships that raises global communications, weather forecasting, space exploration, and national security to new levels. And then some of the countries that they deal with: Australia, Canada, Germany, Greece, India, Israel, Japan, Jordan, Korea, Poland, Qatar, Saudi Arabia, Singapore, Spain, Taiwan, Turkey, UAE, the UK, and obvious, the good old US of A. Here are some of their capabilities: weapon systems here, air, cyber, land, sea, space, training, and logistics are some of the domains they work in. So they have their hands in, like I said, the aerospace and defense community, a holistic approach here from this company. And the reason we are taking a look at them, down 4.76% on the day, we are talking about Lockheed Martin Corporation, ticker LMT, out of the industrial sector. They closed out the day at $424 even, down $21.19. 52-week range as low as $381.55, as high as $508.10, and they are creeping ever closer to their 52-week low. Not quite there yet, but definitely closer to their 52-week low than they are their 52-week high. Average volume, 986 million. Today's was 2.3 billion, and it was just a sell-off from start to finish here. Overall, just a big sell-off throughout the day. Market cap of 106.776 billion, a beta of 0.65, so they are less volatile than the overall market. The market being 1, anything over 1 being more volatile, anything under 1 like this one here being less volatile. Price to earnings PE ratio is $15.54 per share. So that basically means you are paying $15.54 for every $1 of their earnings. That's what price to earnings means. That's the price you are paying for their earnings. Earnings per share, EPS, sitting at $27.29. This is extremely high. This is a very, very high EPS here. Very, very good numbers overall for Lockheed Martin, except for the current valuation, and we'll see that here in a little bit. Earnings date, October 16th through October 20th. Look for it somewhere to fall in there. Forward dividend is $12 per share per year. They are quarterly payers, so divide by 4, or we'll see that here in a little bit. Very nice yield on this one, 2.68%. Ex-dividend date, August 31st. So we just flew past that. It looks like they will pay out September 22nd. So for those of you who held it the day before August 31st, if you were a holder of shares on August 30th, you will get this next payout. If you were to buy them now, you would not get the September 22nd payout. And according to Yahoo Finance, they have a one-year target estimate of $502.85, and that would be right close to their 52-week high here. I am not affiliated with Yahoo Finance, just one of the sources that I like to go to for information. You pick the sources you like, but just make sure you are looking at more than one so you can back check the information that you get is accurate, and we will see my other source here in a little bit. Now, I like to go into statistics, a lot of good information here, but I like to look at specifically dividend yield theory, and to do that, we go down to dividends and splits, 5-year dividend yield average, 2.61%. We compare it to the current 2.68, or over here 2.68 forward annual dividend yield, same numbers. And since this number is higher than their 5-year average, it speaks to potential undervaluation, just slightly undervalued here. If this number was lower than their 5-year average, it would speak to overvaluation. I would not necessarily agree with that on this one, and we'll talk through that here in a little bit. But let's keep going. At least according to dividend yield theory, pretty close to fair value, maybe slightly undervalued here. If you wanted a margin of safety, you'd want this to be up in the 2.8s, 2.9s, maybe even the 3% range. So you'd want it back closer to this $380 low that we saw here. And they have a low payout ratio, 43.26%, so a lot of room to increase that dividend yield over time. Now, under financials, you want to get in here and look at their books. You'll find under financials their income statement, their balance sheet, assets over liabilities. Is their revenue growing? A lot of good information. One of the things we want to look at as dividend growth investors, we want growing free cash flow, because dividends are paid out of free cash flow. So we want our dividends growing over time, and the best way for that to happen is to have growing free cash flow. So we'll look at 2019, $5.8 billion in free cash flow, 2020 $6.4, 2021 $7.6. Looks like a drop off in 2022, but we're going to talk through that here in a minute. $6.1 billion overall from 2019 to 2022. You do see nice dividend growth, free cash flow growth there, but you also see something that I really like: repurchase of capital stocks. And even though it looks like their free cash flow went down a little bit here in 2022, part of that is because they repurchased a significant tranche of their own shares, and they do that pretty much consistently every year. 2019, $1.2 billion repurchase of shares. 2020, $1.1. 2021, $4 billion in their own shares. 2022, even higher at 7.9. So not only do they have growing free cash flow, they are repurchasing their own shares. That is very, very nice to see. Very, very high earnings per share on this one. So far, good enough. Low payout ratio, slightly undervalued according to dividend yield theory. Again, I would like it closer to the 52-week low, but so far all the numbers shaking out pretty well on this one. Let's keep going. Now, I always recommend more than one source, so another one that I like is stockanalysis.com. You can pick up the sources that you like. Just again, make sure you're picking at least 2 to 3 or more so you can back check the information that you're getting. And the 14 stock analysts at stockanalysis.com has looked at this. They call it a consensus hold. I would tend to agree with them on this one. Even though dividend yield theory says it's slightly undervalued, I would definitely like this under $400 per share. That's where I'm at with this one. Now, they have a low estimate of $332. That would be a 21.69% decrease from where it currently sits. I don't know that we'll see this again. Boy, I would really love it if it did drop under that. That would be below their 52-week low here. That would be a new 52-week low if it dropped way back down to here. They have an average estimate of $485.57. That would be a 14.54% increase from where it currently sits. And if it happened to hit their high estimate of $555, that would be a 30.92%. All the while, you could collect that nearly 2.8% dividend yield along the way. Or if you waited and bought them as they came down, then maybe that dividend yield is a little higher. Now, again, you're going to find the same information under statistics. They present it in a different format here. Financials goes back a little further on this one. I like to look at, under statistics and stock analysis, I like to look at the financial efficiency of the company, return on equity, and return on invested capital. Specifically, I like 10% or better. Return on equity sitting at 70.40, very, very high. This is a smoking high number. And return on invested capital, same thing, 24.90, very high number, more than double what I look for at the 10% or better. And I also like to look at their forecasted earnings per share growth. Usually a stock price follows its earnings per share. We want 5% or better here. This is just sitting at 6.57, so it beats that number. This is just similar to how I throw in a bonus on buying back shares. I throw in a bonus on revenue growth forecast. They have a 3.41% forecasted revenue growth over the next 5 years, so very, very positive numbers overall. Let's jump over to the dividend payout. Now, as we said, payout ratio is low, 43.96%. I like 75% or lower, so this beats what I'm looking for. Dividend growth, 7.14%. Very nice dividend growth overall. We went back to 2020. August 31st, 2020, they were paying $2.40. In November, they jumped it up to $2.60. Jumped it up to in November of 2021 to $2.80. Again, November 30th in 2022, they jumped it up to $3. And I would expect in November of this year, they're going to jump it up from that $3 it currently sits at again, and probably pretty much in line with the 7% dividend growth over time. Very nice numbers overall. The only thing I don't really like on this one is the valuation currently. I would love it back under $400 per share. That is kind of where I'm at with this one. I'm holding a little bit. I want a little bit of margin of safety on this one. And industrials overall tend to be cyclical stocks, so we did get a big jump up. I was a owner of this one. I'm not currently. I was buying it 2 or 3 years ago down in the 300 ranges. It ran way up to 450, 460. I sold it, I think, at 430 or 440. Booked those profits and rolled that into another position, and have been waiting ever since for it to drop back into the 300s. So I am a buyer of Lockheed Martin under $400. That's where I'm at with this one. Let me know down in the comment section below what you think. This is the vested interest stock screener. This is also how I set up the videos. Understand the business. That's why we start with the business like we do. Growing free cash flow. We looked at that. There is growing free cash flow in this one. Growing dividend. It is growing dividend over time. Dividend payout ratio of 75% or less. This is actually under 50%, so it checks that box. Check valuation based on dividend yield theory. It is currently undervalued, at least according to dividend yield theory, though it doesn't offer much of a margin of safety there. Buy below current cost basis or within 15% of its 52-week low. It is not quite within 15% of its 52-week low. That is what I am waiting for. Return on invested capital, return on equity, greater than industry average or 10% or plus. It smokes both those numbers. And earnings per share growth equal to or greater to the industry or 5% plus. It was at over this 5%. So again, all the numbers really check out. And this last one is specifically for financial companies. You can use price to book, though you'll want to, if you use it for something outside the financial sector, you want to compare it to its industry average. And price to book for financials, a 1 is fair value. Anything under 1 is undervalued. Anything over 1 is overvalued. That's for banks specifically. And it must meet 5 of the 8 for me to be want to look at a little deeper dive on it, or 6 of 9 if it's a financial company. And this one meets, basically checks all of the boxes on this one. So this is one that again, it's in my watch list. It is one I'm interested in. I just want it under 400 per share. Well, that is it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us here on the Vested Interest community, building our way up to financial freedom. We do a stock pick of the day series like this one Monday through Thursday. So if you have a stock you'd like me to work into the rotation, drop it down below in the comment section. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. And hit that subscribe button. It really does help me out. Thank you. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't money, should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or see the advice comes by a certified financial advisor.